All right, guys, bang, bang. See if we can get some folks in here, and then we'll get started. If you want, you can leave some comments here on the right side.
I'm not in this.
Then we'll go. No, Plano, you're not in this. You will be next time.
Okay.
But I want to get started today with a couple of things. So first is maybe we'll go over in a few minutes the kind of current economic situation, what's actually happening. Good afternoon, Ivan. What's going on, man? And then we can talk a little bit about the Fed's response, and then go over kind of what I think will ultimately change the situation we're in. Yeah, lots of QE. I see you guys in the comments. So go ahead and leave your questions in the comments here. And I'll do my best to answer as many of them as I can as we get through this. But essentially what we're seeing right now, as I've been talking a lot on Twitter and writing in the newsletter, is every asset price is dumping. And those asset prices are dumping because the dollar's strengthening, right? And if you think about it, if I hold an asset, whether it's stocks, commodities, Bitcoin, anything, in a liquidity crisis, everyone is going to look around the room and say, what can I possibly sell so that I can get access to dollars, right? When not everyone has liquidity, people want liquidity. And so what we're seeing is people are dumping their assets for dollars. So if you think about it in terms of if I have 1 unit of a commodity or 1 unit of a stock, maybe $1 used to buy that 1 unit. But as I want those dollars, the dollars literally get stronger. They get more valuable. And so I'm willing to sell my unit of stock or commodity for a lower price, meaning that I'll actually now sell it for maybe 75 cents on the dollar or 60 cents on the dollar because I want those dollars, right? And so the asset prices all draw down, the dollar gets stronger. But over time, what's going to happen here is we're going to be faced with a decision. If the dollar continues to strengthen, asset prices will continue to bleed, right? That liquidity crunch will continue. It'll be a deflationary type environment where the dollar is getting stronger and the asset prices are dropping. At some point, the US is going to have to step in and they're going to have to systematically weaken the dollar. And the reason why they're going to have to do this is to stabilize markets. If they don't stabilize the market, all of a sudden what you're going to find is that asset prices keep dropping and the dollar keeps strengthening. But when they go to stabilize those markets, they're going to weaken the dollar. Think of that as the dollar is going to come down in value and more dollars will be needed to buy the same assets. So if you take a unit of a stock, for example, it used to be equal 1 unit of stock for $1. Well, as that liquidity crisis happens, I'm willing to sell it for 75 cents, 60 cents, 50 cents, etc. So the dollar actually got more valuable. Less of a dollar bought that same unit of stock. In a weakening of the dollar, it goes the opposite way. So all of a sudden, that 50 or 60 cents I was willing to sell my unit of stock for, now all of a sudden I want 70 cents, 80 cents, 90, $1, maybe even $1.10, $1.20, $1.30 for that same unit of stock. So when there's a strengthening of the dollar, all asset prices draw down. When there's a weakening of the dollar, asset prices rise. And I think part of what we have to understand here is that although there's been interest rate cuts and emergency cuts, and there's been tons of quantitative easing, there has been no weakening of the dollar. The dollar has actually continued to strengthen over the last couple of weeks, meaning that asset prices will continue to bleed. And so until we get that weakening of the dollar, asset prices will not stabilize and they definitely will not recover. Now, when there is that systematic weakening of the dollar, all asset prices should rise, right? It will take more dollars to buy the same assets compared to today. And so whether it's equities, commodities, Bitcoin, gold, oil, whatever it is, you will see asset prices rise when that happens. The big question is, when does that happen and how do you participate in this? So obviously, no financial advice today, but one of the things to keep in mind is a lot of traders on Wall Street, macro traders, currency traders, etc., they're long dollars right now. They understand we're in a liquidity crisis, a deflationary environment. They're long dollars. When we get to that systematic weakening of the dollar, though, they're going to flip around and they're either going to get out of dollars, so they're going to go into other assets, or they're going to short the dollar. And the reason is because the weakening of the dollar will go in their favor in that case. And so I wrote last week and basically kind of rated a bunch of assets, what I thought they would do moving forward. And, I'll summarize it with equities is likely to recover over time, right? Unless you think America is going to fail or the asset that you buy on the stock market is going to go bankrupt. Over time, they should recover. Historically, it's shown that. Two was, and I rated that an 8 out of 10. The second one was oil. I think that oil will naturally have to rise because American shale oil producers just can't operate at $20, $25 a barrel. It looks like $35 to $50 is the range in which they'll have to kind of comfortably be able to turn a profit and break even. So I think that over time, we'll see oil kind of return to those types of levels just because they can't operate at such low levels. And then gold, I think, actually is great as an inflation hedge. The problem with gold is just that it's super stable. It's not very volatile in general. And so even when all these other assets, everything from Bitcoin drawing down 50% at some point, equities down 30, et cetera, gold only drew down 12%. Well, when we flip that around and we need volatility on the upside and equities are rallying, Bitcoin's rallying, et cetera, all of a sudden gold will rally. It just won't have as much upside. So I think that it'll end up somewhere in kind of $2,000 to $2,500, give or take, is kind of what I'm thinking there. So I rated that. I think it was like a 3 out of 10, oil a 5 out of 10, equities 8 out of 10. And then Bitcoin, obviously, I think will do very, very well, mainly because it's a highly volatile asset that acts as an inflation hedge with that volatility. So as many of you are commenting in the comments here, we've obviously seen what I call QE forever, right? Which basically means there's a ton of liquidity crisis that's going on. But at the same time, I think that there is a huge component of when we get into that inflationary period, meaning that the Fed is going to flood the market with dollars. They're going to weaken the dollar, and they do that by flooding the market with dollars, making the dollars you hold less valuable. All of a sudden, people will look for assets where they do not get caught in that devaluation of the currency. And so anything from equities, commodities, Bitcoin, et cetera, will do well. But I think Bitcoin outperforms just given the volatility that it brings with it. Kind of it's a feature, not a bug. And then the other example that I want to bring up is in 2008, gold was down 30%. And when gold went down 30% in 2008, it was during this liquidity crisis, right? So if you think of 2007, there started to be some kind of warning signs. 2008 was kind of the real heart of the crisis into 2009, and then ultimately the recovery 2010, 2011. Well, in 2008, gold, which is supposed to be this inflation hedge and this safe haven asset, went down 30% kind of in a 6-month period in the middle of 2008. Why did it do that? Liquidity crisis. People wanted dollars. Anything with a liquid market got sold. But what then happened is the government had to respond. And when they responded with massive QE at the time, about $700 billion or so, all of a sudden investors looked around the room and said, where can I go that I can get my wealth out of dollars, which are being devalued, and get into an inflation hedge asset, which was gold. And gold ended up rallying more than 3x, ended up around $1,800 an ounce there. And so I think similar thing is going to happen here over 2020 and into 2021 with gold and Bitcoin. But the thing that is different about Bitcoin and gold is imagine if in the end of 2009 and into 2010, when all of the people were rushing to go find gold and gold was rallying, if 50% of the gold miners just shut off their operations. So literally 50% of the incoming daily supply of gold just disappeared right when investors wanted it most. Obviously, that asset would become more scarce. It would become more valuable. Supply and demand would take over, et cetera. Well, that's what we're about to see with Bitcoin, right? We're about to see the fact that there was this deflationary period, liquidity crisis, everything got sold off. Government's going to respond with massive QE. When they do that, I believe that investors are going to rush for inflation hedge assets. They're going to look for assets that are not dollars. And as they do that, Bitcoin will be one of the more attractive ones, given its provable scarcity. 21 million Bitcoin exist. And as they're doing that in the next 50 days or so, we're going to see 50% of the incoming supply disappear, right? The Bitcoin halving is going to occur. And so as I've been saying for months and months now, this is rocket fuel for Bitcoin, in my opinion. I really think that the interest rate cuts, the quantitative easing, and the Bitcoin halving all happening around the same time period is a setup that that is going to be quite attractive over the next 18 to 24 months for Bitcoin. So that's where we kind of are right now. A couple of comments on the Fed's decision this morning. Obviously, they announced kind of infinite QE or QE forever. And really the idea here is they've been ratcheting up both in the repo markets, in their quantitative easing, et cetera. I mean, it seems like it was months ago, but just last Sunday, they announced $700 billion quantitative easing plan and an emergency rate cut to zero. That was like the big monetary stimulus bomb that they dropped on everyone, right? Right before futures opened last Sunday, everyone was freaking out. Oh my God, look at what they're going to do. Well, all of a sudden, that $700 billion number, $500 billion was going to go by treasuries, $200 billion was going to go by mortgage-backed securities. All of a sudden, that's now become unlimited, right? No matter what is needed in the market, they will bring to the table. And so I think that what we're seeing here is that the Federal Reserve, the US government, et cetera, they realize that this is an unprecedented economic event. There's never in history been a time where we drop in unemployment from 3.5% at the end of February to what could be over 10% by the end of Q2. Some are estimating could be as low or as bad as 20 or 30% unemployment. And then also seeing GDP drops. The estimates are 10, 20, 25, 30, 50% drops in GDP, right? I mean, this is unprecedented stuff. And so as many of you who read the newsletter would know, last week I wrote something about the unemployment during the Great Depression. And during the Great Depression, a lot of people say, 25% unemployment. That's the number that sticks out in our head. The Great Depression happened over 5 years, so 1929 to 1933. And during that time period, the actual math of how we got to the 25% unemployment in 1933 was we started out in 1929 at 3.1% unemployment. So very similar to what we had last year and in the beginning of this year. 3.1% then jumped to 8 point something percent, about 8.5, 8.7%, if I remember my numbers correctly. Then in year two, year three, so being 1931, we jumped to over 15%. And then only in 1932 and 1933 were we up over 20%. So there was this kind of ratcheting up of the unemployment number that eventually got us 25%. What I'm fearful of here is we're going to go from 3.5% at the end of February to as high as 8, 10, 15% by the end of Q2, if not into Q3. And so that type of ratcheting up of an unemployment number just hasn't been seen before. And then when it comes to the drop in GDP, if you think about what's going on, everyone's sitting at home. We've literally sent everyone home. And so, of course, GDP and economic activity has fallen off a cliff. If you've seen some of these charts where, restaurants, for example, over the last 4 weeks have gone from kind of their normal activity all the way to zero. Literally zero economic activity happening in many cities and states around the country, and then also in other countries as well. So I think that's a huge thing that we've got to be paying attention to, where kind of normal tools are not going to solve this problem, right? Unprecedented times call for unprecedented actions. And I think that's what you saw this morning with the Fed's announcement that they're going to have this kind of infinite quantitative easing. Now, I say all that with, I believe the Fed is doing what they should do and what they need to do to solve the problem in the short term. They really don't have a choice. We're in the situation we're in. They got to solve the problem. They got to help people, right? There's going to be millions of Americans out of jobs over the next 90 days. And so they have to bring as much firepower as possible. The problem is that the best short-term solutions are really, really bad long-term solutions. So I think we're starting to see kind of how this is playing out, where there's a lot of people saying, hey, let's get the short-term help. But also we understand anytime you get into kind of infinite money printing, it's never ended well historically. And so unfortunately, I think that's something that we're being set up for here. But it's a balance between kind of understanding market structure, understanding the response, understanding timelines, understanding liquidity crisis, but still having some moral compass and understanding that if this is correct, right, if what I'm saying actually happens, there's a lot of people that are going to get hurt, and we need to do as much as we possibly can to help those people at the same time. So shoot your questions in the comments here. I'll kind of scroll through and see if I can answer as many of them I can. I'll do this for about an hour or so. Polina and I ordered some Dominoes, so you guys may get interrupted with some Dominoes here. But let's see what you guys have in the comments. What does this mean for my 401k, savings and checking accounts in Chase? What can we do to help slow the value from being siphoned? So Two things. One is your 401k, whatever assets you hold is going to be the performance of those assets, right? If you're in stocks, obviously, whatever the performance of those stocks are is what's going to happen to your 401k. Hopefully, you're younger, and so you kind of have time on your side, right? That's one of the key things here, I think, is younger people. They're learning a hard lesson right now. They're learning the importance of strong balance sheets, both at corporations, but also personally. They're understanding that cash is king in a liquidity crisis, and they're also understanding how investments kind of affect the outlook on their life, right? This is probably for most people under the age of 35, the first time they've had real wealth going through a financial crisis. And so I think that's important. The 401k obviously is a piece of that. Your savings and checking accounts in Chase, obviously, I am not of the belief that we are going to have any solvency issues at the bank currently, given the data that we have. The dollars that you hold are obviously right now they're getting stronger, meaning that the dollar you own can buy more goods or more assets because those asset prices are drawing down. Over time, it wouldn't surprise me actually if when the government acts, those dollars get weaker, and so you'll be able to buy less, right? Asset prices will rise. And so there's kind of this weird situation where being long dollars, that's essentially what you are by holding the dollars. By being long dollars, it's a really good thing in the short term. Once that action happens, you'll start to see some devaluation there and asset prices will rise again. So you kind of need to be able to navigate that. But if you're asking about bank solvency, I'm not really worried about that at the moment. Let's see here. What else? Peter Schiff is staying away from the dollar. Yeah. So exactly what I'm talking about here. I think Peter and I actually agree. Right now, the dollar's strengthening, but it's going to be a short-term thing, right? So if you're a currency trader or a macro trader and you want to kind of get into and get some short-term profits, going long dollar with leverage, all that kind of stuff, that's what those folks are doing. But very quickly here, as we get the quantitative easing, et cetera, the dollar will be devalued. What ends up happening is a lot of those currency traders and macro traders are actually going to flip around. They'll short the dollar. They'll go long gold, long Bitcoin, long other assets because most other asset prices will rise. So they're kind of long dollar short term. They'll flip around when we get that quantitative easing. So I think over a long period of time, for most people who are not traders, staying away from the dollar is actually probably a pretty good way to look at it. I'm not going to talk so much about Bitcoin price. I don't think that really matters that much. I love the gold commercials, Jason. Yeah, look, everybody is the same, right? And I think that here's the crazy part is a lot of the gold bugs were right in kind of the 2008 crisis. They saw the asset reach all-time highs, and the quantitative easing theory kind of played out there. I think they're going to be right again. Obviously, part of the problem is that in the years in between these crises, they kind of just have stability, right? And they get some fluctuations here and there, but for the most part, it's just a stable asset, great savings tool, et cetera. I do think that gold will perform well during this financial crisis, or at least coming out of the financial crisis as the quantitative easing solutions get introduced. I think Bitcoin will do the same. I'm just of the belief that Bitcoin has more volatility, so it draws down more in liquidity crisis. It will actually outperform drastically in kind of the recovery. I'm on record as saying I think Bitcoin will be the best performing asset coming out of the financial crisis, and so obviously my portfolio kind of reflects that. When does this start hurting the housing market? When borrowers begin defaulting? What is likely soon? What happens? Adam Patel. So yeah, I think that this is not just housing. This is also true in commercial real estate and other places. What you have to understand, kind of what I wrote about this morning, is this what I call the economic circle of life, let's take the corporate market first. So you've got material producers. Those material producers basically give the materials to suppliers. Suppliers take a bunch of materials and they create a product. The supplier then sells that product to the business. The business then sells it to consumers. That business takes part of their revenue. They pay rent to a landlord. That landlord then pays part of that rent to a bank who helped them finance the purchase of the building. So you kind of get this circular action. Well, when there's a break in the circle of economic life, meaning the business is shut down, all of a sudden you get upstream and downstream damage, right? So the upstream damage, meaning that all of a sudden the supplier doesn't have a business to sell the products to, and the materials producer can't actually get it to the supplier because there's no throughput. What you get is almost like a dam in a river. So the business shuts down. Now you have the supplier left holding a bunch of products they can't offload, and they can't reorder any more materials because they don't have any demand for it. So you kind of get this stuffage, or literally the dam in the river. Everything above the dam just gets blocked up until either the dam is released or it gets so overwhelming that it goes over the dam. right? So I think that's what's happening kind of upstream. You see like in restaurants, all of their suppliers, et cetera, just left holding food because the restaurant shuts down. Now, that's pretty easily explainable. The downstream damage is actually really, really important, though. So let's say that you are that restaurant or some business and you've got rent. Well, that's a fixed cost for your business. And so you could probably actually eat into your profit margin. Let's say you're operating a restaurant at a 10% margin and you continue to have kind of steady revenue. You've got all of your fixed costs, all your variable costs paid, and you get 10% profit. Well, if revenue drops 10%, you actually probably still could pay your fixed and variable costs, and you just would make no profit. But the second that your revenue goes to zero, you don't have enough cash. I think the average small business has like 17 days or 27 days of cash in their bank. And so you just can't pay your rent. So April 1st comes, how do you pay your rent? Right. And I think that's where you're getting landlords that are saying, look, I would love to give rent abatement or give concessions, but I can't because the bank won't give me any sort of concessions, right? I owe money to the bank, so I can't let you not pay because then I can't pay. And so you get in this weird world where there's got to be either concessions that are made from the bank level down to the landlord, who then passes that on to kind of the tenant, or you've got to have the government step in, and the government's going to give capital to that small business so they can pay for the rent. But I think whether it's the corporate market or the kind of the retail or housing market, what you're going to see is a liquidity crunch. And however long this liquidity crunch lasts, the deeper we get into it, the more people will have to sell assets, right? They just need liquidity. And so I don't think right now prices are really reflecting that. Kind of people are still wrapping their head around the fact we're in a liquidity crisis. But very shortly here, it wouldn't surprise me to see home prices dropping, to see kind of corporate real estate prices dropping, et cetera, mainly because people are forced sellers, right? They don't have anything. They're motivated sellers. They don't have other options. They're going to take whatever the market will give them. And because the dollar is so strong or so sought after, they're going to have to actually take less dollars in order to sell that property. So I think over time, we'll go ahead and we'll see the housing market affected. If the liquidity crisis lasts long enough, that's the big question. How long will it last? Is it another month? Is it 3 months, 6 months? Nobody knows yet, but I think that's the big thing to watch there. Let's see here. Will governments change the goalposts? I don't really understand that question. So if you want, just reply with it and I'll see if I can do it again. When we hit 40% unemployment, will the Hunger Games start? Look, unemployment's real, right? There's the saying, like, if you want to see what humans are really made of, don't feed them for 3 days, right? And I think that that's a very real, kind of truth, which is people have to eat. People have to protect their families. People have to do things in the world, and they need jobs in order to be able to fund those activities. And so what ends up happening here is if we get to high levels of unemployment, 20+%, I think that we're going to see quite a bit of social unrest, quite a bit of violence, et cetera. And so, my hope is that we never get close to that stuff because, again, that there's kind of the truth behind all of this. There's the monetary policy stuff, there's the fiscal policy stuff, but there's real American lives and all over the world, not just Americans, right? All over the world, people are being hurt, families are in jeopardy. People are losing their businesses that actually fund kind of the income for their families. And so this is real stuff, right? And we really need to kind of take a serious look at how do we solve these problems, because again, 40% unemployment would not be pretty from a social unrest standpoint. Let's see what else. Silver stocks. I put silver and gold in the same category. I don't know enough about silver to kind of decipher between the two, so I won't really comment there. Why is Bitcoin not skyrocketing? Okay, this is a really important question. So everyone's like, oh my God, they announced all this QE. Why didn't Bitcoin just triple overnight? And what you have to remember is that we're still in a liquidity crisis, right? That's why they're announcing the QE. So you don't expect overnight for Bitcoin to go from being affected by the liquidity crisis where it sold off, up to 50%, now sitting about 30% down, and then immediately just triple. Instead, what you're likely to see is exactly what just happened. We're in a liquidity crisis, but Bitcoin is either staying flat or up a couple 100 basis points, right? It's up like 2, 3, 6%, whatever it ends up being on each day. While it's up, 1 to 5, 1 to 6% each day, other assets are selling off though. Equities are down, 2 or 3%, et cetera. And so you're actually seeing kind of a decoupling of Bitcoin and these other assets. We're still in a liquidity crisis, so you're not going to see any violent moves to the upside. But what you are seeing is kind of this belief that people are not willing to sell Bitcoin, for example, in this environment, $4, right? That's why you get either flat or a little up, right? It's actually net buyers or just net holders. You don't get net selling because they understand the environment that we're in. Yes, it's deflationary right now, but we're headed into an inflationary period. And in that period, gold, Bitcoin, et cetera, will be super valuable to hold. So I think that's why you see it not skyrocketing, but it's kind of holding really, really steady and continuing to kind of be flat to up when other assets are, pretty much down, but not down significantly. Although on Friday there, we saw some pretty violent moves to the downside in equities. I think that's kind of the way to think about that. Let's see what else here. Bitcoin wasn't built to withstand a pandemic. Yeah, I would basically say Bitcoin is built to withstand everything. Right. Here's the crazy part about all of this is that while the world is literally appears or people feel like it's ending, literally everything is going to fall apart, etc. If you notice, Bitcoin continues to produce block after block after block after block. Nobody is worried about what is Bitcoin going to do, right? Is it going to produce the next block? Of course it's going to do that. And then also, while that's happening, there's no response. Bitcoin doesn't care what's going on in the world. Nobody's calling up the Bitcoin CEO and saying, hey, what do you think about what's going on? Are you going to fire any employees? Are you going to change your monetary policy? No, it just continues to do what it's supposed to do. And over a long period of time, having the consistency and discipline of a programmatic monetary policy, I believe will be superior to what we're seeing in the traditional markets, right? And kind of traditional fiat currencies. It's absolute chaos. If you think about what's happening right now, we literally have a currency that is being manipulated more than we've ever seen. And we're seeing announcements for infinite quantitative easing. This is the greatest monetary stimulus experiment that the world has ever seen. And the bills behind how much goes to who is being held up by bipartisan politics. Right? We've got a bunch of people who are going into a room and they're negotiating. And if you see the things that they're negotiating about, it's absolute chaos, right? Both sides are to blame. And if they really wanted to help the American people and the American businesses, what they should do is go into a room and get a deal done and not worry so much about who got the latest, best thing done or who got their agenda accomplished, et cetera. Instead, go help the American people, go help American businesses. And so I think that unfortunately, what we're seeing right now, there's a lot of people being hurt, but we're seeing the difference between the Bitcoin monetary policy and the fiat monetary policy. The fiat monetary policy is absolutely freaking out. They have lost control. They have no clue what is going on. They keep firing bullets and they keep not working. Right. This morning, we literally had infinite quantitative easing announced and the public markets are down. How does that happen? Infinite quantitative easing, public markets are down, Bitcoin flat to up. Right. So what you're starting to see again is that programmatic kind of monetary policy is going to be really, really important. The more chaotic the world gets, the more dependable it appears that Bitcoin is. People will start to realize, hey, there's value in that. I want consistency. I want that dependability. And therefore, it'll start to earn the trust of people in this chaotic environment. Britain just sheltered in place enforced by police. Why hasn't this happened in the US? I don't even know if that's true or not, but if it is, obviously the United States is born and kind of bred on freedom. And so I think that the second you get into the police enforcing anything, that there's a lot of social unrest possibilities that happen. And so I think that that'll be kind of a last step, measure for them. So we'll see there. Let's see what else. Green light to print 20 trillion. Yeah, look, I don't know how much. Right now, the Fed's balance sheet is at 4.6 trillion. It went up about $356 billion last week. I think that they're going to have to add at least $5 trillion to kind of even have a chance at stabilizing this and getting us back to a recovery process. If they do that, that means the Fed's balance sheet would have to at least double. Right. There's many people who think it's more than 5 trillion. Some people think it's 10 trillion, 15, 20 trillion, as this person asked. I don't know exactly what will happen, but I definitely don't think it's 1 or 2 trillion. And even if it was only 2 trillion, you're still getting a 50% increase, give or take, in the Fed balance sheet. So I just think that we just haven't seen stuff like this before. And people just got to pay attention. It's just wake up. Right? Pay attention to what is happening and understand how money works and how the manipulation of the money is not in your favor. Right? The people who are being bailed out, just so we're very clear right now, the people who are being bailed out are not the average American. The average American's not getting bailed out. It is the wealthy, right? If you look at it, it's hedge funds. Think about that. Hedge funds have gotten bailed out before the American people. Just let that sink in for a second. The US government bailed out hedge funds before it bailed out the American people. That's not a situation that is good long-term for the American people. And so I think that we've really got to understand how money works, and you got to understand kind of that the system is not rigged in favor of the little guy. And you've got to understand how to protect yourself, how to get insurance on your wealth and make sure that you can actually kind of do the things you need to do for your family. Pomp broadcasting from a crack house. I'm actually at my apartment in New York City, and I tried my best to not let you guys figure out where I live. So call it a crack house. That's fine. Is there a Bitcoin ETF? I don't think there's a chance that a Bitcoin ETF gets approved this year. Maybe not even next year. I mean, people just got way too many other things going on, the market volatility, et cetera. So we'll see what happens. But if I was a betting guy, I would bet on it not happening this year for sure. Joe Clokus, shout out to Joe. Joe's on here. He's done a fantastic job of helping me get all of this video stuff working so that while we're in quarantine, we can keep bringing you guys content. Yes, I got off dial-up internet. I finally have an Ethernet cord. I'm ready to rock and roll. We can live stream and everything. So shout out to Joe there. Let's see. What's my view on this global crisis? How to save the value of the money that's being earned so hard over the years? It's amazing if you'll give us your vision and advice. Yeah, again, I think that right now we're in a deflationary environment. Dollar will strengthen, assets will go down. Over time, that will switch to an inflationary environment. When that happens, you want to have kind of real assets, or other assets than the dollar. So whether that's equities, commodities, I think all asset prices will rise when we get into that inflationary environment. So you want to just make sure that you're ready for that when that happens. Let's see what else here. Keep putting your questions in the comments. I'll try to get to as many of them as I can. How would the economy behave during this crisis if Bitcoin was the standard? No Fed printing money, but market going down. No banks dumping the market, neither. Yeah, so I think that's a good question. Like if we were on the Bitcoin standard, how would the markets, kind of act? The short answer is we don't know. Right. But I do think that what we do have is historical examples, right? Caitlin Long's been preaching for a long time about, previous economic crisis where we were still attached to the gold standard. There was some sort of recessionary or depressionary type event. The government did not intervene, but we were allowed the market cycle to kind of quickly play out. Bad companies went away. Good companies stayed strong. People lost jobs and then were able to get new jobs, et cetera. And the market was able to correct itself very quickly. Because that's the other thing that's going on here, right? And this is really important to address, which is, let's take the airlines are the best example to use. So we literally have an entire industry that has spent $45 billion on stock buybacks, right? And before I get into the airlines, let me explain stock buybacks for a second. So I did an interview with Meb Faber. Meb did a fantastic job explaining the stock buyback issue. So previously, what somebody would do is if they had a lot of cash, they would issue a dividend to investors. Over time, there was, through a bunch of tax laws, a more efficient way to return value to investors rather than issue a true dividend was to do a stock buyback, right? Take shares out of the market and your earnings per share goes up, stock price goes up. And so a stock buyback is just a more efficient way of delivering a return to investors than a traditional dividend, right? It's a pure tax component. That's okay. There's nothing wrong with doing that, right? And Meb would even argue that that is the job of the executive team, is to return value to shareholders. Now, where it gets dicey is two things. One, executive compensation is tied to share price. Therefore, executives are personally incentivized to do stock buybacks in order to pump up the stock price, because then they get paid more money, right? So the incentive structure is off. As Meb did a great job of explaining, that's not a stock buyback problem. That's a board of directors governance problem. And maybe there should be some rules there as to how we actually structure executive compensation and whether stock price can be tied to compensation or not. But that's not a stock buyback problem. That's an incentive problem that can be addressed. My problem is that's one bad thing on the incentive side. Even worse is when they're issuing debt to then get capital to then do stock buybacks, right? If you think of it that way, now what you have is a debt-fueled stock buyback program that is pumping up the price. So you're literally taking on more debt so that you can then buy your own stock to jack up your stock price so that you personally can get paid more money. Really, really bad situation. So what ends up happening is the airline industry has made about $45 billion in stock buybacks over the last decade or so. They're currently asking for a $50 billion bailout, right? Now, there's two ways to look at this. One is, hey, that $45 billion got sent back to shareholders in the sense of they were buying back their shares and stock prices were going up. The other way to look at it is if they had that $45 billion still on their balance sheet, they wouldn't need the bailout. Right, they would have stronger balance sheets. And so both sides have points that are valid. But what I do think that you're going to start to see here is you're going to start to see both executives and individuals in their personal households say, hey, strong balance sheets matter, right? I need to make sure that I am always solvent so that I then can profit. The point of business is to make profits. You can't make profits if you're insolvent. And so what I think we're seeing here is there's a whole generation of people who've been running companies for the last decade plus who said to themselves, I can make bad decisions. And if I get to the point of insolvency on an entire industry basis, we will get bailed out by the government. I just don't think that that's the way it should work. And so market cycles are there to clean out bad companies. Right? If you look at a lot of companies right now, they're super over leveraged with debt. They, in many cases, right? I mean, Mark Yusko has been saying this for a long time. They don't even make enough EBITDA to service their debt. So they're just over leveraged companies. When you get a market correction, they're supposed to get washed out. If you don't let them get washed out, what you then have is just a bigger and bigger bubble. You kick the can down the road. And then when you do get the final market correction, it's really bad. So think of the market correction we had in 2008 compared to what we're going through now. Some would argue that it's really bad. Some would even argue that the decisions we made in 2008 and 2009 have contributed to making this even worse than it should have been because we made bad decisions then. We kicked the can down the road for 10 years, right? But going back to the market cycles, is I think you got to let these companies kind of get washed out. If you end up being insolvent, you should not be allowed to continue running the business. And there's a lot of people who've made the point on Twitter, I think, which is very true here, is if you get to the point of insolvency, it's not like the assets go away. The planes don't disappear. The employees don't disappear. What happens is those planes end up in the hands of more innovative teams, new upstarts, other competitors who are better run organizations. And therefore capitalism and kind of free markets allow for the strongest to not only survive, but thrive, and the weakest end up going away. Now, I caveat all of that by saying in that process, there's a hell of a lot of people that get hurt. Right? A lot of employees lose their jobs. There's a lot of carnage that's kind of left in the wake of it. And so I don't necessarily think that it's a positive thing in the short term. I actually think it's a super negative thing, but I do think that's how market structures work. And so what we're starting to see here is that the United States government is making decisions between being a fully capitalistic society in which free markets dominate, competition dominates, et cetera, and taking care of its people. Right? Demographics have a lot to do with this, right? If you look at the United States demographics, we've become older as a country, right? The baby boomer generation has kind of continued to grow in age. And so now we're getting to this place where our country's starting to look differently. And also the response is different to these crisis type situations. And I think that we're seeing that. So what that goes back to is, I think actually what you should say, one of Meb's ideas, change the law. So don't allow people to do stock buybacks because it's more tax efficient. Make them both just as efficient. So stock buybacks or dividends, people will start to dividend cash, but tell them, right? And this is my kind of angle on this. If you participate in dividending and stock buybacks, and you then want a bailout, you are not eligible for a bailout. So you can do this stuff, but if you do it and then you go and you want a bailout later, you're not eligible. So if you don't want to do stock buybacks or dividends and you need a bailout, you're eligible. Now, if you give executive teams this kind of option, right, and let them choose, my guess is that many of them will actually choose to continue to do dividends or stock buybacks, kind of return value to shareholders. And what they'll know is, oh, I'm never going to get a bailout. Therefore, I need to keep a stronger balance sheet. And therefore, rather than United Airlines, which I think spent like 70% of their free cash flow on stock buybacks over the last 10 years, maybe they would only spend 10 or 15 or 20% and keep the rest of the cash on their balance sheet, right? And they'd probably be in a much better position. And so I think that's it's an incentive game. We've got to understand how this stuff works, because once you understand the incentives, then you know how to kind of change behavior. So we'll see that. Let's see what else. There hasn't been a free market in the price of money for 107 years. I don't know how long it's been, but it's definitely not been a free market anytime soon. Let's see. Do you think this crisis is a perfect storm for people realizing the real Bitcoin value that would drive more adoption, and countries will buy a lot of Bitcoin to store value? How can this play out? Yeah. So one thing to keep in mind here that I think is really interesting, a lot of people haven't talked about yet, is as the dollar strengthens, it's actually other currencies are weakening against it. So if you look at USD, the Australian dollar pair or something like that, Australian dollar's fallen off a cliff compared to the US dollar, right? US dollar strengthening, Australian dollars dropping in value. And so all of a sudden, what becomes really interesting is, well, if I'm in a country outside of the United States and my currency is actually devaluing against the US dollar, I'm going to do one of two things, or at least think about doing one of two things. I'm either going to buy dollars, or I want access to dollars. That's the thing that's getting stronger. Or I'm going to get out of my currency into other assets, right? So Bitcoin, et cetera. Bitcoin's 24/7, 365, kind of globally available, just need an internet connection, et cetera, becomes a really, really big advantage over other markets, whether that's equities, commodities, et cetera. And the ability to simply just log in to an exchange, upload some information, and immediately buy the asset is a big advantage. So I think that as the dollar strengthens and other currencies weaken against it, it wouldn't surprise me if we see kind of capital inflows from other parts of the world outside the United States, simply as people trying to protect their wealth in an inflationary hedge type asset. I mean, even if Japan had 0 cases, the Olympics is all about tourism. So I don't see the point of Abe trying to go ahead with it. Yeah, I think if I understand correctly, the Olympics got postponed today. So I don't think that they're still trying to go ahead with that. But we'll see what happens there. Look, the whole coronavirus thing, or COVID-19, I think that what people need to understand in the United States, and I'll caveat all of this with, it would not surprise me if this is an unpopular opinion. I don't know. But basically, we're faced with a choice. If we allow the coronavirus to run rampant and we do nothing, what we will do is most likely we will overwhelm and eventually collapse the healthcare system, right? There's not enough ICU beds. There's not enough ventilators. There's not enough space, all this kind of stuff. So regardless of how deadly you think it is, just the fact that people need to go to the hospital or the emergency room when they get this, in many cases, ends up being you're going to overwhelm and eventually just collapse the resources of the healthcare system. Now, trade that off with, if we do what we're doing, which is essentially trying to stop the collapse of the healthcare system, then what that means is we are going to drastically negatively affect or even collapse the economy, right? So, hey, everyone go home, stay inside, the economy collapses. So we're faced with a trade-off. Do we collapse the economy, or do we collapse the healthcare system? Unfortunately, right, in many cases, there's disagreement here. Right? It's not like there's one simple answer between kind of all these various groups of people. Everyone has their own opinion. What the United States is choosing to do right now in the current form is we are protecting the healthcare system, preventing collapse, but the economy is suffering because of it. Now, there's a lot of talk in Washington from politicians, et cetera, that I think Trump was tweeting today, maybe after 15 days, we actually reverse that and we go to, okay, let's protect the economy, and hopefully we'll be past the worst parts of the virus scare and kind of the threat there. I don't really know kind of what happens. Predicting the future is super hard. But what I do know is that we're right now faced with, do we allow the healthcare system to collapse, or do we allow the economy to collapse? We're choosing to prevent the healthcare system from collapsing, and therefore the economy is struggling. And so it wouldn't surprise me that in other places they're realizing the health of their citizens, is much more important than the actual economic benefit of certain events. And so that's just a trade-off that everyone in the world is going to have to choose to do. Let's see what else. When will central banks start buying Bitcoin to transparently collateralize their shit coins like they once did with gold? Yeah. So all of a sudden, it starts to look pretty interesting that Russia, China, et cetera, have been the largest gold buyers for years now. I think Russia's been the largest buyer for a decade of gold and holding in their reserves. at some point people are going to start buying Bitcoin, right? I don't know when. It wouldn't surprise me if they haven't already, right? I think Venezuela maybe announced, and again, it's Venezuela, and kind of the administration there is shaky at best, if not, frankly, just kind of full of shit. But what they basically said is they were going to put, I think, Bitcoin and Ethereum or Ether in their reserves. I don't know if they actually ever did it, but there was some announcement about that. It won't surprise me when other central banks and countries go to do this. Again, they may have already started to do this, but when you get into a world where the dollar is going to be weakened because it has to be weakened to stabilize markets, all of a sudden you're going to want other assets. What are other assets that people can hold, et cetera? I think gold and Bitcoin would do well in that situation. And so seeing governments and central banks buy Bitcoin wouldn't surprise me at all. Actually, I would expect them to do it. So we'll see how that happens. How long till Finance 1.0 is donezo? Yeah, so here's a really big thing, in my opinion, is we are not going to see the complete collapse of Wall Street and the fiat system and then the rise of kind of this other system overnight. Like, it's not going to be, okay, on June 1st, Wall Street collapsed. On June 2nd, Bitcoin was the global reserve currency. Instead, what I think you're going to see is you're going to see a multi-decade transition from the current system, kind of the legacy financial system, a fiat system, et cetera, to this new decentralized global digital world that has Bitcoin as that global reserve currency. But again, I think that's going to take years and years and years to occur. And what you kind of get is you get this compounding of progress, right? It's kind of, if we get 1% better every day, that compounds on itself. And over 20 years, we end up being in a much, much better place than we are today. And so I think that in that kind of compounding, you also get some inflection points, right? Things like, the Bretton Woods Agreement. If you look at the legacy system, that was an inflection point in the legacy system. I think that we'll have some of those moments in this new system as well. But right now, they're kind of both operating in parallel. Obviously, the legacy system is much, much bigger, much more robust, much more liquid than the new system. But if you look, it's been 10 years and we've made some pretty good progress. Wouldn't surprise me 10 years from now, we'll be looking and say, wow, we made a lot of progress. 20, 30 years from now, maybe we got a shot at actually starting to kind of surpass the legacy system. But that'll take some time for that to happen. So we'll see what happens there. What else? I'm going to stay on for about another 15 minutes here. So let's see what else you guys have. I don't know anything about Canadian banks, unfortunately, so I can't really comment on that. Do I think China owning 80% of crypto destabilizes the future of crypto? Yeah, I don't really understand this thought process of China owns crypto, right? Yes, there are mining pools that are in China, obviously. Yes, there are miners in China, et cetera. But Bitcoin, the network, is one of the most decentralized things in the world. There's miners all over the world, right? And if you look at here in the United States, we've got incredible hash power, or hash rate coming online. And really what you're starting to see is even more decentralization over time on a geographic basis. And so, I get that China has been very kind of excited about this, been kind of out in front as a nation, et cetera. But I'm of the belief that Bitcoin and crypto is very global. There's people literally all over the world. One of my favorite stories to tell is Polina and I went to Bulgaria, and I tweeted out and said, hey, I'll be in Sofia. Anyone who's into Bitcoin or crypto, I'd love to meet you. Meet at this coffee shop. 75 people showed up on like a day's notice, right? And so it's just, you never realize kind of how many people are into this stuff until you start to see some of those moments. And so it's really exciting to see, but I'm of the belief that this is a very global thing. And obviously the kind of monetary stimulus experiment that's going on right now is only going to push people further into this world and wanting to learn about it, et cetera. So do your part in helping educate them. Let's see what else. Capturing stranded gas from fracking. Yeah, I mean, look, there's all kinds of really interesting ways that people are getting access to cheap power. And so renewable energy, capturing flared gas, all that kind of stuff, I think is already happening, one, but two, will continue over over time. Tom W. asking REITs thoughts. How do you see them playing out in the next 6, 12, 24 months? Look, I think they're going to follow the housing and kind of real estate markets, obviously, right? And so right now, you probably don't see too much impact. As we get deeper and deeper into liquidity crisis, you're going to see more kind of consolidation there. You'll see some fire sales, motivated sellers, et cetera. And then you'll see the recoveries, just like we've seen in the past. And so the whole thing about these kind of financial crisis is it's usually not different, right? You get the same panic and fear, you get the same liquidity crisis, you get the same kind of monetary stimulus response, you get the same performance from assets time and again, and then you get the same recovery over time, and you reach all-time new highs on the other side of it. So I think it's just really important that people kind of keep their emotional discipline. They keep understanding how important it is to just kind of remain calm, breathe. Remember, we're going to get through this. Understand the decisions you make today are actually going to have an impact in the future. You know, one of the things, the best lessons I've ever learned in investing is the day you buy the asset is the day that you determine the return that you get. Right. And so if you're able to buy assets for less than they're worth, obviously you're going to make a pretty attractive return. And I think that people just got to remember that, there's two ways to look at kind of deep drawdowns in prices. There's obviously the way to look at it is, oh my God, I'm losing money and prices are dropping. Or there's the way to look at opportunity and say, hey, I can buy something that is now 30, 40, 50% cheaper than it was 2 months ago, but it's the same asset, right? One of the things about equities that actually is important to kind of call out here is, and Mark was walking me through this, and I thought it was a really good point, is there's a lot of people. So take United Airlines, for example. I think they did last year $6.5 billion in EBITDA, but right now their market cap as of last week was $5.7 billion. So you could look at that and be like, oh my God, their market cap is lower than their EBITDA. Well, kind of, but that was 2019 EBITDA. This year, they've had such a massive drop off in revenue that EBITDA is not going to be anywhere near $6.5 billion. Right. I actually think that they went from 91% occupancy on all their flights or something like that, I just read, to about 24%. And so what ends up happening is that company isn't so much, quote unquote, on sale as the market's just repricing what the company is now worth based on the revenue they're going to make this year. And so what you've got to really try to understand here is, and not get caught, is using the analysis of historical data to make an assessment on current value, right? You've got to get access to some kind of information in their filings, et cetera, to understand, well, what does it look like their performance this year, so I can understand what the company's worth today versus what they did in 2019. But I think REITs is another example of that, right? Especially, take a commercial real estate type trust. All of a sudden, what happens if the tenants aren't paying, right? I don't understand enough about the intricacies of the various REITs, but all of that type of information becomes really important, because it's one thing to have the stock price and have that go down, but also understanding, well, did the value of the assets actually change right now, and how long is that sustainable? Will the value actually recover in the future? And if so, it's just the appearance of the value changing, but actually the true value hasn't changed. All of that needs to go into the analysis, I think, in order to really determine what assets you buy now and kind of what you look at. So let's see what else here. They feel that many populations are not disciplined enough to be productive at the same time as not spreading the virus. So it's either one or the other. Yeah, look, I tweeted today, if we want the American economy to recover, the best thing we can do is put American workers and businesses back to work, right? And, a lot of people kind of all freaking out like, oh, do you want the virus to spread? And I think what we have to understand is, the world is not black and white. We don't have to make our solutions black and white. So we don't have to say 100% of our workers need to go home, or 95% of our workers need to go home, or everyone goes to work. Right? There's all kinds of solutions that operate in the gray zone that can allow the economy to at least not completely shut down and have 25, 50% drops in GDP, but at the same time kind of tamper down the spread of the virus. And so I think that I'm going to write about that for tomorrow, so you guys can kind of read more intricate thoughts there. But I think that's really the key to this is we don't need a black and white solution. What we probably need is something that's a little bit more in the gray, something that's a little bit more nuanced. And that's how we get the American economy back. But it's also how we continue to kind of slow down the spread of the virus and also prevent the overwhelming of the healthcare system. So we'll see. Global debt at 1 quadrillion by 2028. Although that it would be funny previously, there's a chance that you're not wrong. So I'm not even going to go there. Fed has the next stage of the plan. Digital wallets, every American to be used as debit cards, topped up monthly by the Fed. The Treasury pays by buying 2 very expensive platinum coins monthly. Is gold or silver dead? Yeah. So look, the whole idea of 2 $1 trillion platinum coins is one, hilarious, but 2, very real. I mean, it's in the Congresswoman's proposal, and so we'll see what happens there. With that said, there is a lot of questions. How as they introduce the stimulus, how are they going to get the money to people, right? I think in that Congresswoman's, I'm forgetting her name, I apologize, but in that Congresswoman's proposal, basically everyone would get a debit card. It would come with $2,000. It would be it would be reloaded every month with $1,000 every month until the crisis ended, plus 12 months. So 12 months after the crisis, then they would stop doing that. Newsflash, if they start doing that type of stuff, I don't think they'll ever stop. So it's kind of like once you get hooked, right? Many, I call this the stimulus addict. It's just like a crack addict. Once you get on and you get high, you need another hit. And get high a second and third and fifth and 20th and 100th and 200th time, you need more crack. And same thing with an economy that's addicted to stimulus, right? We're seeing it now. In 2008, we needed $700 billion to start. Well, now we're talking about in the trillions, right? And by the time we're done with this, I think it's going to be, 5-10 trillion. And so I think that the second they start giving people money, whether it's on these debit cards or they give them a digital wallet and somehow, send stable coins or whatever the functionality is or the mechanism, I am of the mindset that we won't stop. And it'll just be an everyday thing because these emergency situations allow them to kind of make giant leaps of innovation that are hard to roll back afterwards. Now, what I will say is innovation can be good or bad, right? It's still innovative, but it could be good or bad. And so in this case, I think most people would look at this as a non-negative, meaning that it's not really hurting people. It's actually trying to help people. But if you look at things like, I think it's the DOJ just asked for the right to hold people indefinitely. Right. You got to kind of keep attention, and be really alert in these times, because what you get is you get the distraction of right now a health crisis and a financial crisis. But are we going to see civil liberties encroached on at the same time? Basically, because in the time of emergency, we need special powers. And then those special powers never get rolled back or we never return to the norm. I think people need to stay really, really alert right now. And we've got our hands full, right? As a country, as a population, the government, and this is not just an American thing. This is across the world. People have to understand there's a health crisis and there's a financial crisis, and they're happening at the same time. And it's a really just kind of wild, weird time to be alive, but that's where we are today. And so, stay alert and let's make sure that we don't get civil liberties kind of encroached on in the meantime. All right, I'll take 2 more questions and then I'm going to run. There's Domino's here now, so that means I got to go eat. U.S. paper dollars and gold are disappearing. I haven't heard that, so I'm not really sure. James Sauls, what's up, man? Can we get our stimulus checks in Bitcoin? Look, I think that it's unlikely that anyone's going to be paying in Bitcoin anytime soon. A stable coin, look, it's probably not going to happen in the next 12 months, but at some point in the future, it would probably be cheaper and easier for them to give folks a digital wallet, be able to lock up your ID there and kind of, verify who you are. And then they basically are able to send you, a digital dollar of some sort, whether it's backed by the Fed or the Fed participates in it, or it's a private initiative. I do think that stable coins and a digital dollar is on the way. So the big question is just when does it happen, and is it in the United States or somewhere else first? So we'll see. We'll see how that happens. Let's see. I'll take one more question here. How government? Yeah. So all right. There's a bunch of questions around like, should a government just print a bunch of money and go buy Bitcoin? right? And the whole idea would be the cost of printing money is very low. If Bitcoin's going to be so valuable, why don't I go buy a bunch of it? I don't think it's a bad idea, right? If you're a government and you are losing faith in or belief in your fiat currency, and you're going to end up, kind of driving it to zero over time because through devaluing it and printing more, why not accelerate it but have the parachute, right? I continue to say Bitcoin's like a parachute that's masked as a adrenaline rush because it's so volatile. But if you need the parachute, print a bunch of money and go buy Bitcoin, of course. That makes a ton of sense. And for a government to print a couple $1 billion, I don't think is a big deal. So it wouldn't surprise me to see somebody do that. I don't think it's going to be the United States. I don't think it's going to be a superpower in the world. I think it's going to be kind of a smaller, more nimble country that really kind of buys into the idea of cryptocurrencies and sees no other option. But we'll see there. And then that also, it really brings me to this idea that in these times, there's just a lot going on. And so as you interact with people, I just want to close out and just say there's a lot of people that are being hurt right now. I think for most people on this stream and for me, we're thinking about kind of the more macroeconomic impacts, the financial system, monetary policy, how this is going to play out 5, 10, 20 years from now, et cetera. But it's really important to also understand that there's a lot of people right now, right? I mean, there's people on this stream right now who have lost their jobs and don't know how they're going to make rent on April 1st, right? And so my overwhelming message to people is, regardless of what's happening kind of in this financial crisis and in this health crisis, we just need to be kind to each other, right? We really, really need to understand that we don't know what our neighbors are going through, what our friends are going through, what our acquaintances are going through. And so one of the best things that you can do is just simply be kind. Right. And whether that is the person at the grocery store, the person at the local shop, the neighbor you pass as you're keeping your social distance, or just people that you talk to online, I think being kind is kind of one of the easiest things to do. It's free. And you never know when it'll have a positive impact on folks because, again, there's people on this stream right now who've lost their jobs and they don't know how they're going to make rent on April 1st. And the last thing they need is somebody being an asshole to them. Right. And it just kind of compounds the stress of their life right now. And so if you can't help people financially, if you can't kind of do things that, are kind of more obvious in the material world, the least you can do is be kind. So I hope that, you guys kind of take that message to heart and help people to kind of have that resonate over the next couple of weeks and months as we go through all this. But that's it for tonight. I'm going to shut off this stream. I may do some of these more often. I actually enjoy it and kind of hearing all the questions and stuff. If you guys can go subscribe to the newsletter, you can go to pomp.substack.com, go download the podcast, tell all your friends, and then feel free to share this live stream with a couple of folks, and let's see if we can continue kind of spreading the good word. I appreciate you guys all listening, and we'll do it again soon.